Politicians have access to information most people don't, and they can use it to make a ton of money. This is illegal, but hard to enforce. The question is, can lawmakers police themselves? Welcome to America Uncovered. I'm Chris Chappell. Speaker of the House Nancy Pelosi is one of the richest members of Congress. She and her husband are worth over $100 million. Those pantsuits? They're made from unicorn tails. That's why they're so powerful, and why they come in every color of the rainbow. Pelosi made headlines recently for some of her stock purchases. Last week, a financial disclosure revealed that she and her husband, venture capitalist Paul Pelosi, bought call options worth millions of dollars for stock that included Google and Disney. A call option is where you buy assets at an agreed-upon price by a certain date. So technically, the Pelosis didn't buy the stocks, but they bought something similar. Nancy Pelosi's spokesperson said these purchases were made by her husband and that she doesn't own any stock herself. So everything she's doing is ethical. But only technically. Technically, they didn't buy the stock. Technically, she doesn't own the stock herself. Technically, unicorns aren't real. But even if she wasn't directly involved, it wasn't a good look. That's because just days before those purchases were made, she insisted that members of Congress shouldn't be banned from trading individual stocks.
Should members of Congress and their spouses be banned from trading individual stocks while serving in Congress?
No, I don't know to the second one. We're a free market economy. They should be able to participate in that.
Is it just me, or did she seem panicked at the idea of losing the millions she makes on stocks? If she gave that up, she'd have to survive on only her salary and the fortune her husband makes from his venture capital and real estate investments. Oh, the humanity! Pelosi got criticism for her position, and here's why. Through their jobs, members of Congress have access to information that most people don't. And that's a good thing because they need that information to make important decisions that affect the country. But it's not a good thing when they use that information for personal profit. And by profit, I mean using that information to sell stock in a company they know is going to take a hit, or buy stock in a company that they know is going to get federal funding. It's kind of like playing hide and seek, but making everyone tell you where they're going to hide first. Yeah, it's fun for you, but it's not very fair for everyone else. When people use knowledge that's not available to the general public to profit from stock trades, it's called insider trading, and it's illegal. Under normal circumstances, people who engage in insider trading face civil penalties by the Securities and Exchange Commission or criminal prosecution by the Department of Justice. Even Martha Stewart was fined $195,000 and went to prison for obstructing an investigation into her insider trading. Well, that seems harsh. Trust us, it's a good thing. And these rules apply to members of Congress as well. Technically. Congress passed the Stop Trading on Congressional Knowledge Act, or STOCK Act for short, in 2012 to combat insider trading among their own members. The STOCK Act was groundbreaking, and not just because it's one of the least bad acronyms that Congress has ever come up with. The STOCK Act forces lawmakers and their immediate family to publicly disclose their stock trade records to a database within 45 days of the transaction. High-ranking congressional staffers are also required to disclose their stock trades because of the influence they wield. But a decade since the law was put into place, no one has been prosecuted under it. And it's not because everyone in Congress followed this law really well. No, it's because this law has been as effective as using a kazoo to hunt mountain lions. Now, if you're wondering, wasn't there a congressman from New York who was convicted of insider trading? Yes, Representative Chris Collins was charged in 2018 with insider trading and lying to the FBI, and was later sentenced to 26 months in prison. But that was because of his position on the board of a company, not because of his position in Congress. Which just raises the question, Congress members can sit on a corporate board of directors while they're in Congress? Yep, that's allowed. That's like playing hide and seek, and not only do you make everyone tell you where they're hiding, but you also make all the rules yourself. I'm starting to think members of Congress aren't playing fair. And after this quick break, I'll talk about Congress members who seem to have violated the Stock Act, not for insider trading, but in other ways. Welcome back. Business Insider spent months investigating members of Congress for potentially violating the Stock Act in a project called Conflicted Congress. According to Business Insider, 13 members of Congress were in severe violation of the reporting requirements of the Stock Act, while 115 were in violation to a lesser degree. I know, that's shocking. I thought there'd be way more. But that was just over the past 2 years, and those are just the ones that were reported to ethics officials. There could be others that were never reported. This ranking is based mainly on how prompt lawmakers and their staff were to report their trading activity. But it also includes things like if they traded individual stock versus using a blind trust, or if their paperwork was legible. Yes, some members of Congress submitted handwritten financial disclosures. Yeah, handwritten disclosures. The median age of the House is 59. The median age of the Senate is 65. Don't ask them to fill out an Excel spreadsheet. So how late were these lawmakers and their staff in submitting their disclosures? They range from 1 day late to 4 years late. To be fair, these are members of Congress we're talking about. They're probably busy, getting absolutely nothing accomplished. It takes a lot of time to be that impressively inefficient. When asked why they didn't turn in their disclosures on time, Congress members and their staff offer excuses including ignorance of the law, clerical errors, and mistakes by an accountant. Wait, so the people who make laws claim they don't know the laws? Neat. That's like going to a butcher, ordering a veal cutlet, and getting a gym shoe filled with shaving cream. Either this is malicious, or they're really just that incompetent. I can't tell which is worse. And if members of Congress don't file their disclosures on time, they get penalized, right? Well, kind of. They have to report the reasons for their late disclosures to the House or Senate Ethics Committee, but they usually get what amounts to a slap on the wrist, such as a $200 fine. And depending on the reason, the fee can even be waived. This process, however, isn't transparent. There are no public ledgers of what Congress members or their staff are fined, who has paid their fines, or who has gotten waivers. Basically, it's the classic case of we've investigated ourselves and, say it with me now, found no wrongdoing. Both lawmakers and their staff work out any breaches of the law in private. Few are open with the public about why they failed to disclose their stock trades properly or how they work to fix the issue. I assume the way they work it out is everyone in favor of keeping this gravy train chugging, say aye! The way Business Insider got this data is by using a computer terminal in a congressional building in Washington, D.C., and by contacting members of Congress or their staff directly. Sorry to all you armchair sleuths out there, these aren't things you're going to catch from your living room. Now, getting back to members of Congress trading individual stock, while it's not illegal, it can certainly create the appearance of a conflict of interest. For example, through analyzing their disclosures, Business Insider found that at least 75 lawmakers bought and sold stock in companies that made COVID vaccines, treatments, and tests. But that would only be a conflict of interest if vaccines, treatments, and tests were pushed on the public by politicians. Glad that's not happening. Senator Richard Burr, chairman of the Senate Intelligence Committee, faced backlash when it was revealed that he and his brother-in-law dumped stock just before the market dropped in March 2020. You know, when Corona time began? That's despite projecting optimism in America's response to the pandemic. He wrote an op-ed that the United States today is better prepared than ever before to face emerging public health threats, like the coronavirus. This is like a landlord saying their apartment building will be perfectly safe to withstand an oncoming hurricane, while packing all their stuff into a moving van. The Justice Department opened a criminal investigation into Burr, but closed it after just a few months. However, he's still being investigated by the Securities and Exchange Commission. And he's not the only one who's being accused of hypocrisy. Democratic Representative Tom Malinowski publicly stated that nobody should be profiting off selling COVID remedies.
This is not the time for anybody to be profiting off of selling ventilators, vaccines, drugs, treatments, PPE, anywhere in the world.
Yet, as the pandemic spread, he bought or sold stock in companies dealing with the coronavirus pandemic to the tune of $1 million. And he failed to disclose a good amount of it. Well, of course he told everyone not to invest in that. It's because he wanted to scoop up all the stocks while they were priced low and sell them when they were high. He's not a hypocrite. He's a savvy hypocrite. Malinowski said his broker handled all his trading decisions and he was completely removed from the process, but owned up to not filing his financial disclosures on time. I think I should invest in buses, considering how often politicians throw their brokers and accountants under them. Politicians haven't been hypocritical about just COVID, though. Those hailed as environmental champions have personally pumped money into companies that rely on fossil fuels, like ExxonMobil, BP, and Shell. Advocates for restricting cigarettes and vapes are quietly investing in tobacco giants. Critics of big tech are quietly investing in big tech companies. And animal conservationists have been buying pantsuits made from endangered unicorn tails. Like I said, this isn't illegal, but it does appear to create a conflict of interest, which is why some argue that members of Congress shouldn't be able to trade individual stocks at all. So why aren't we passing laws to do just that? I'll get into that after the break. Welcome back. An analysis by the Eastern Finance Association found that some powerful members of Congress were performing much better than the market before the Stock Act was passed. This suggests that they were using their access to confidential information to gain an edge, and made huge returns in the process. Yet one of the problems with regulating this is that it's hard to prove whether politicians are doing insider trading. Legal experts say insider trading cases are exceptionally difficult to prosecute because they require definitively proving whether someone acted on non-public information. That hinges on demonstrating intent, which is a high burden. It's not like while people are insider trading, they record themselves singing a song called "I Love Insider Trading." Even if they did, they could just say they weren't insider trading, but just getting ready for their audition on The White Collar Voice. This could explain why no one has yet been prosecuted under the Stock Act. And that's why many on both the left and the right say it's time to ban congressional stock trading altogether. Now, to be clear, most people who are against members of Congress trading stocks are against them trading individual stocks. Most would be okay with politicians putting their money into a blind trust or a diversified fund. That would certainly save plenty of accountants and brokers from several buses. So, can Congress be pressured into passing a law that restricts Congress from individual trading? Well, maybe. The Ban Conflicted Trading Act has been introduced in both the House and Senate with bipartisan support. It would ban Congress members and senior congressional staff from buying or selling individual stocks, as well as serving on any corporate board while in office. But the bills, which were introduced last March, don't have a ton of support. In the House, the bill has 22 co-sponsors, while in the Senate, it has just 3. I know, that's shocking. I thought there'd be way less. So do you think Congress will be willing to police itself like it did with the Stock Act? Or do you think these bills are going to fail? Let us know what you think in the comments below. And if you like this show, please know we could not do it without direct support from viewers like you. Visit patreon.com/AmericaUncovered and contribute $1 or more per episode to help us keep the show going. So click the link below. Once again, I'm Chris Chappell. Thanks for watching America Uncovered.